Hi, this is Zach Muir from Zach's Traders Cafe with a look at some major markets on Friday, the 16th of September. Starting off with the FTSE 100, and all of a sudden looks rather more constructive than in recent sessions. Support coming in here towards 66.50, much higher than the 66.15 August floor, and also the what's basically a bullish engulfing candle for yesterday's session as well. So. Depending how we close on Friday, one would maybe take a view that the worst is over for this market. End of day close above the 50-day moving average of 67.66 is what the bulls would really like in order to then be targeting a return to 6,900 plus over the next couple of weeks. Onto the DAX, and here perhaps not quite so positive in terms of the price action, still struggling at the 50-day moving average after the gap to the downside at the beginning of the week. Really, end of day close back below the 50-day line, 10,410. A sell signal for at least a test of 10,300. Below that, we're looking at a retest of the 200-day moving average at 10,226. But lots of ifs and buts there. So really, the first thing is to look for an end of day close below the 50-day moving average. Before getting too negative, even though we do have an August-September double top island reversal. For the US markets, gone into rather volatile, but remains rather volatile. Yesterday, sort of sell buy on the candles there this week after the gap to the downside. But the gap to the downside through the 50-day moving average, the big sell signal on the Dow. The only thing now is really how much of that move to the downside it will retrace. Clearly, if we close back above the 50-day moving average, that would negate the sell signal. So still a little bit of a mystery in terms of the price action, but so far not quite as bearish as the gap to the downside would have implied. Onto the S&P, and here you can see that we've got the same sort of setup as the Dow, and not surprisingly, possible or probable support there at that line from May, and while we're above that, one would be looking for a return to at least the 50-day moving average at 21.67, but only an end of day close back above that would really cancel out this month's bearish breakdown below 21.50. For the Nasdaq, that was never really as bearish as the Dow and the S&P, and you can see how, in fact, it was not really able to close or sustain the close below the 50-day moving average. So maybe this is the leading market, helped along by Apple, clearly over the last couple of sessions. It looks like we're in a trajectory heading for 5,000 plus on this market. So while there's no end-of-day close back below the 10-day moving average at 47.78, one would be quite happy to target towards 4,900 and beyond over the next couple of weeks. For the currencies, cable, I'm probably taking a rather more bullish view of it than most, really above the 50-day moving average at 131.68. I think that's the way to go. Confirmation of the bullishness would be an end-of-day close above the 10-day moving average at 132.83, and that would take us back towards the 134 plus zone. Below the 50-day average would change the pattern and maybe suggest that we need one final dip back below the 130 level. For the euro, it's been a very, very calm and quiet market all week, and that hasn't really changed, just resting above the 10 and 20-day 10-20-day moving averages around 112.25. While we're above that, perhaps up to 113, but that really is trying to make a very dull situation rather more exciting than perhaps it should be. So really sideways on the euro. For dollar yen, we've got a situation where this is also relatively quiet, but within a triangle formation, 101.50, 103.50. You can trade the range over the next few days as we wait for BOJ action over the next week. The break to the downside is probably the move we're expecting, given the RSI or double RSI failure at neutral 50 over the first part of September. Finishing off with gold, and here you can see that we're also rather marooned in terms of the price action. 13.10 to 13.15, 30-50 rather, the range. Ideally, there's a break above the 50-day moving average at 13.33 is an early bird buy signal, but really this looks like a market which is in a sideways consolidation between the low 13s and the mid 13s, and we need a fresh trigger to change that pattern. That's it from me. More updates at the same time on Monday.